welcome back to another video. Today we're going to be talking about a stock that in my opinion is massively undervalued and that I've been buying for some time now and continue to buy on any dips. Okay, so this stock in the past 6 months is down by 21%, and in response to you guys have wanted to see opportunities in single stocks on dips, and this is one of them. So Tattooed Chef is a leading plant-based food company offering a broad portfolio of innovative plant-based food products that taste great, they're sustainably sourced, and the whole company is vertically integrated. That means they own the production lines from where the potatoes and greens are produced all the way to selling these products to retail stores. But they're also capturing tailwinds in increased frozen food sales. So just in 2020, frozen food sales were up by 21%. Okay, and I don't think this trend is going to go anywhere anytime soon. So they have so many highly innovative products. So as we can see here, they have so many branded points of distribution: Walmart, Sam's Club, Costco, Target. Their points of distribution are 23,000, and their objectives for 2021 is to operate in 10,000 stores and with over 65,000 points of distribution. And here on the map, you can see exactly where each of their stores are located. So right now, they are also introducing more products or SKUs to Target. The innovative new offerings at Target include the cauliflower mac and cheese bowl, pizza bowl, veggie hemp bowl, Buddha bowl, plant-based burrito bowl, and the enchilada bowl. Okay, so they're having more and more products in all these major retailers. The next thing I want to talk about is their high innovative capacity. So in 2017, they only had 2 SKUs or 2 products on their shelves, whereas in 2020 they offered 38 SKUs. Whereas in 2021 they're almost doubling that. Well, not exactly, to have 62 items on sale. Okay, and I think that is a hallmark of an innovative company. And they also have a pipeline for 150 more plant-based ideas. The next thing I want to talk about is, of course, their revenue. All right, so they came out with their fourth quarter results about a week ago, and these results were very, very exciting. So first off, I want to say they're going to increase their store count by 41% and points of distribution by 35% by the end of the first quarter. Revenue was close to 40 million, which was a 48% increase compared to 26.8 million in the prior year period. Whereas Tattooed Chef, their branded product, so everything labeled with Tattooed Chef, their revenue recorded 23.9 million, which was an increase of 172% compared to 8.8 million in the prior year period. Okay, now this line is a little bit deceiving because their net income was 41.5 million compared to 2.2 million in the prior year period. However, most of that was because of one-time tax benefit. Okay, so that is a little bit misleading. They didn't just like increase their revenues by basically more than 30-fold. Okay, in the span of a year. Revenue on the year overall was 148.5 million, which was a 75% increase compared to the 84.9 million in the prior year. Okay, so again, something that I really like to see, and that's basically it for their 2020 revenue. And again, seeing their branded products increase of 172%, that tells me that they're a highly innovative company, and I really like where they're going. Let's talk about next about their total addressable market. Total US frozen retail sales in 2019 was 55.2 billion. So their opportunity that they're targeting right now is valued at 12.6 billion, which is mainly in desserts. However, their current opportunity more long term, which they're going into now, is prepared foods, meats, pizza, vegetables, fruits, etc. Okay, so right now they're targeting about a 12.6 billion market cap, or total addressable market, or TAM, whereas they still have a lot of expansion to get into to tackle the whole frozen food section, okay, which is the main point of Tattooed Chef. Okay, the next thing I want to go to is their compounded year-over-year growth and future projections. So if you're looking from 2018 to 2021, they had a 68% compounded annual growth rate just for their revenue. However, for their established brand products, they have 640% year-over-year growth, which was achieved with no investment in marketing and brand. So when you compare it to something like a Tesla, of course we're comparing apples to oranges, but they spend basically no money on advertising just yet. Tesla doesn't. And this company doesn't spend any money on advertising. It's more of like word of mouth, and they were able to grow their year over year established brand revenue by 640%, which is something that I really like to see. Okay, and because they are vertically integrated, they were going to be increasing their profit margins, right? Because that's how vertical integration works. It's a lot of high upfront capital cost to acquire the means of production, but once you actually pay everyone and down the line, you actually own it, and so that way you're able to get increasingly higher margins, which is something that I like in this company, which is also similar to something that Tesla does. They're a vertically integrated company. Okay, they don't outsource their means of production. Okay, so that's something that I really like to see. All right, and of course, I own a couple shares of this company, and a lot of people will say, well, okay, of course, once we emerge out of the pandemic, this company will start losing money because a lot of people will go out to restaurants and go out to eat again. However, I don't think that's going to be the case because people still have to eat. Okay, so more people are working from home. People are going to need to eat food anyways, and also store that food, right? And of course, frozen food is the items that you want to store. And because this is such a highly innovative company, I could see them potentially expanding into other sections other than frozen foods, such as shelf items. Okay, and let's look, if we go all the way down, they also talk about their projected growth for until 2026, which of course is highly speculative and a lot of things might change, but by 2026 they hope to do 1 billion in revenue, okay, with gross margins of 35%. And again, that's one of the key positive things about being a vertically integrated company. Okay, so 2021 they're expecting $222 million with a gross margin of 20 to 25%, and I really do like these projections. So if you look at the compounded annual growth rate from 222 million to 300 million in 2022 to 500 million, and then again doubling that in 2026 to $1 billion, I think they could easily hit this. And again, that's why I'm staying in this stock for the longer term, because I really do see this not only as a food company, but also more as a tech and highly innovative company. And I really like their projections. I really like how they're beating analyst forecasts, and I want to see them profitable in the future. And again, I'm just excited for what they're going to do. And again, I own a couple of shares through my Wealthsimple account, and I'll be able to dollar cost my way average. I think my average right now is around like $19.20 for Tattooed Chef. So I'll be holding my shares. And yeah, let me know what you think about this company and about its long-term potential. Do you think it's overpriced at 1.5 billion? Do you think that people emerging out of the pandemic and out of the Roni world, that's going to affect their bottom line? Let me know down in the comments below. Of course, you can check out my real-time buy and sell orders. There's a link down below. And of course, you can always email me with questions and ask me down below in the comments. Of course, I would appreciate a like and subscribe. Take care, guys. Have a fantastic day, and I'll see you in the next one.